Good morning, ladies and gentlemen, and I welcome you all back from the break. So, as I was saying, that we have an interesting panel discussion which is coming up, and the topic of discussion is going to be on rise of the machines and how AI is revolutionizing BFSI industry. For which I would like to invite the moderator for the panel discussion, Mr. Balaji TK, Chief Information Officer from Orange Retail Finance Limited. And I would like to welcome the fellow panelist, Mr. Dominic Vijay Kumar, VP and Chief Technology Officer, Art Housing Finance India Limited, and Mr. Nikhil Gandhi, Chief Technology, Digital and Operations Officer, APAC Financial Services Limited, and Mr. Anand Agarwal, Chief Information Officer and Chief Information Security Officer, Manaviya Development and Finance. So over to you, Mr. Balaji TK.
Thank you very much. I take this opportunity to thank the Elets team for organizing this wonderful session. It's a completely regenerating session for us, and the topic is quite interesting. I also want to thank my co-panelists who will be giving their insightful on this interesting topic. The topic given to us is rise of machines. How is AI revolutionizing the BFSI industry? Previously, this AI was a kind of a buzzword in most of the domains and BFSI particularly. But what has moved forward is now there are many use cases and it is put to use in a real time right now in many of our domains. So let's understand from our industry experts. Before that, I'll also want to give us few areas where we have tried our AI capabilities also. So I do represent Orange Retail Finance. We are a non-banking finance company started as a traditional player in a tier 2, tier 3 town. So we moved completely to digital space right now. So we are kind of digital operations we do have. So where we have a complete end-to-end onboarding without seeing a customer. So it's completely end-to-end suite with only customer can able to download the apps and within few minutes you can able to complete the onboarding. So it has gone to that level with this kind of AI automations. Okay. So very interesting use cases are there with me. Before that, I want to listen from our co-panelist. My first question will be, how is this AI is transforming the banking industry? I would like to hear the view from Nikhil. Nikhil, please go ahead, Nikhil.
Okay, so thank you, Balaji, for first of all for setting the context. What I would say is for organizations like APAC Financials, Orange, and Art, and all similar organizations which are into financial services and within financial services focused NBFCs. So when we talk about APAC Financial Services Private Limited company, which is focused on MSME, micro enterprise lending. If you think of MSME, you need to think of APAC. Similarly, Orange will have their own focus area and Art with a specific focus area. For all of us, when we think of AI, and every time this word is being used in different contexts, for somebody in manufacturing industry, they will talk about AI when they talk about Tesla. In banking financial services industry, we talk about AI for 2-3 important things. We talk about AI when and how we can acquire customers intelligently, giving them a personalization effect when we are talking to the customer and we position our product. It is highly personalized based on what is the surrogate data which we have available for that customer at this point of time. And instead of an experience which the customer is going to have different every time when he speaks to an individual or a bot of the financial services company, his experience is very personalized and I would say in the direction where he wants to go. Similarly, when we move to the next stage, which is process automation, or we call today in robotic process automation, how AI is going to take a role where based on the prior data, we have a term which was coined by Gartner long back was algorithmic business, where the algorithms change based on the data. When we talk about machine learning, the data which is there, underlying data, based on that, the algorithm refines itself and our robotic process automation becomes more and more matured. Third, when we are talking about conversational AI, where any chatbot today you are talking about the bots, I would say the chat window used to be there some 10 years back in a website, but that used to be a chat window where we were connecting with an individual. Today, we know that all the financial services organizations are introducing chatbots, but these chatbots are intelligent chatbots. They converse basis the context in which you are talking, or what is the most likelihood of you going through a particular channel. With this, organizations which are into secured lending, possibly something like art and many other institutions like ours, uh, we are maturing AI. Not only AI, we are maturing technologies like blockchain technologies, where we see the DLTs will become the future. The way in a telecommunication industry, the distributed ledger technology has become a like has been adopted. We are seeing that even in the real estate industry also, it is going to be adopted very soon. The projects are going on, and financial services institution which are into secured lending will automatically come there. With this, I think one foundation which was laid by our existing government in terms of pushing the implementation of Jandan Aadhaar, mobile, all those things put together, financial institution has become really mature. The platforms for organizations have become matured, and technologists like us have come into the foreground, saying that how we are going to drive the business of the organization. I think when we talk about a lending institution, predominantly the focus group which we have here, what are the important things? One is a propensity for selling a loan, or a propensity of a customer becoming default. These two areas, if you are able to arrest appropriately, possibly you as an organization is going to do great. And when we think of that, I think AI or machine based decision making plays a very important role. Let it be an institution itself with its own data and experience of that data. Let it be the data which is available with bureaus. Let it be the data which is available with other fintech companies which do provide, after aggregating the data from let it be from NSDL for fraud reduction, let it be from companies like all these fintech companies like Karza and others, when they aggregate data and give you an indicator of is are you knowing your customer appropriately? Is the customer, if you think of the bank statements of these customers, are they in line with your credit policy? Is the customer past bureau record in line with your credit policy? And you are almost, you're there. Your scorecard says that okay, this customer more or less is okay. We would want to give a final touch of an individual who would take a appropriate decision depending on the ticket size and the kind of business models we have. But this is something which has revolutionized the an entire process of lending and credit underwriting. I think with all these coming in play, there is one more area which, all these things are positives of AI based revolution in lending industry or financial services industry. What is become all the more important is for us as technologists to really peek into our cyber resilience and our infosec resilience, where because of these tech platforms which are being consumed by us, built by us, as well as integrated with other tech platforms, is the are we covering ourselves against any of the cyber threats, any of the infosec threats? And that is an area which really needs a niche focus apart from the business focus, which is predominantly the most important thing. This area, if you have the right hygiene available using the AI based solutions, and there are fantastic AI based solutions now available in market, where that piece also you can have a surety that you have a peace of mind. With these pillars put together, I think the industry is on the path of being matured. So when I used to talk about this AI based solutioning and how we are going to look at it. 3 years back, I used to always mention that it is something which is supposed to be matured, and we are going to take a couple of years. I think the pace the pace which we have seen over last 2 to 3 years, we can confidently say that the industry is on the path of being matured, and we would see it's not going to be more than a year and a half. This industry is going to be matured based on the strong base of algorithmic business, the machine data based artificial intelligence solution. That's what I would say.
Thank you. You summarized awesome, Nikhil. Very, very happy to listen to your views. Happy about it. You touched base on how the NBFCs are focused on certain areas of business, and for that area of business, how this AI is contributing to them in terms of acquiring the customer and then doing kind of intelligent decision on top of it. And you also touched based on the bot, how it is being done previously, and then how the conversational bots, and you also touched based on how blockchain integrated with AI is helping the organization. You touched on two major things, like on a secured selling and then on a default how it is helping. And also you talked about the 3 years journey, how you are seeing the AI become matured. I think you summarized most of the things. I'll go to Dominic right now. Dominic, your views, please.
Okay, thanks, Balaji. Okay, when I look at AI as a technology, AI, which is a mixture of AI and ML. So, AI as a technology, especially in the banking industry, what I think most of the points Nikhil sir has covered. But when I look at precisely on the kind of business we do, the affordable segment, because AI plays a very, very important role for us when we are kind of customers we handle, the tier 3, tier 4 cities customers. And the one is AI helps us in the delinquency part and forecasting, especially even though these days we are started working on the understanding the sentiments of the customers. Okay, chatbot is one thing which is always available, but understanding the sentiments of the customer and doing underwriting on that basis, AI plays a very important. For example, I want to name the bureau where we had asked for a particular region delinquency report from a particular bureau, and basically I can say it's more related to MFI kind of business where we wanted to know the data what we got. What really amazing, that really helped my credit team to set up their own scorecards. That means AI is the especially the fintechs and the bureaus are using AI in a larger way, capturing the data from all the angles, whether it's the first time borrower or he's got a history of 10 years, 20 years history. These kind of data is so well captured, and the artificial intelligence is used to derive sorry, region wise delinquency reports, which was really amazing. And this really helped us, especially in the collections part during the COVID time and all that. This really helped us. And AI is, as I still agree with Nikhil sir, AI has to be little bit improved on the cyber part, cyber security, where we are still at the nation stage. But yeah, in that way, AI is also playing an important role in the cyber security. But when it comes to core business, artificial intelligence and machine learning has made a real revolution in last 3 years, last 3 to 4 years, bringing in a lot of data, accumulating a lot of data, capturing the niche inch of the data. Now today, when I look at the data of a customer who's in Rajasthan, a Chomo, a small area, village, you can say, tier 4 city, I can even get the data of that customer also. So artificial intelligence is not only helped NBFCs or the banking financial industry to set up their thing, reduce fraud, risk management. Today, when you talk about bank statement analysis, like when you look at the bank statement, like companies like Parfios and other companies where they do an analysis on the certain set of bank statements, the data what we get is really amazing. You can't manually, this cannot be done. That means there is a kind of tool, artificial intelligence, which is being used to arrive at that particular report, so that is easy for my credit team to make things in. And when you look at the customer service point of view, artificial intelligence is very good, played a very important role in helping self-servicing the customers in a bigger way. Today, even the rural customers prefer to have a chatbot kind of interaction. When you talk about their interest certificate, when you talk about the statement of account, they don't want to wait for a longer time. If they can get it through the chatbot, that's very good. So AI is it's like I always again reiterate the same thing. I agree with Nikhil sir. AI is a mixture of machine learning also, because without that you cannot bring in the intelligence onto the. So AI is making the future of banking or NBFC or any business, financial institutions on a generic form. It is going to be the data. It is going to be the artificial intelligence. Being it is not reducing the manpower. It is rather increasing the capability and the business proportion to be in a faster way. End of the day, it is a customer centric tool which is going to act and help us in doing a business in a very very good way. That's my take, Balaji.
Superb, superb, Dominic. So few things you told how it is being specialized in the banking domain, and also like how AI is contributing with the ML, even though both are being two different subject, both together gel well and kind of making decisions. You also touch base on forecasting and sentiment. One best part you told is since you are relying heavily on a kind of a credit score mechanism, like instead of using a credit bureau, you also made a kind of a parallel credit scoring with your
Yes,
AI. So that's quite interesting because might be a new customer, first time borrower, so all this kind of data will really complement with each other. That's
yes,
very
yes.
nice, interesting point. So similar in line also like we also like two major tools we use our kind of AI for our decision makings and then for collection we use heavily on AI. Now I will go to the second very important point, which is a customer experience journey. Okay, so we are here because of the customers. So if that is the case, how AI is streamlining the entire customer experience journey, or what kind of better services the AI is proposing it, so that every customer is having unified service. Because if it is a branch-based model or individual-based model, if a customer comes, we cannot guarantee everybody talks in a different tone, different languages. But by using AI, how can you give a kind of unified customer experience? I will go to Nikhil. Nikhil,
Sure. Thanks, Balaji. I think there are two things. I will start with what should be our vision in matured financial services institution. What should be our vision? Our vision should be that if I am let's say, a shopkeeper who is sitting in the small town of Rajmundry, and I just mention to Alexa that, hey Alexa, I would like to need a loan for expanding my business. uh, Alexa should be integrating with the financial institutions which are available in that particular area, based on the profile of that individual who has asked Alexa this question, would shortlist a few of them and mention that you have APAC Financials A, B, C as the institutions which are niche in the area of business expansion loan for the kind of customer segment in which you are. And if you would be interested to take up this further, I can assist you. The moment the person shows an interest, there is a flow which we all of us we take a flow of lead management, right? So there is a flow of lead with that particular company's API, which starts saying that, okay, we already have an information that you are Mr. Krishna Kumar from Rajmundry with so and so. Your location is already tagged. Can we get further information? There is a link which is sent to you for us to onboard you with your KYC information and get associated data. The flow goes such, including getting a permission to get their bureau record and other surrogate data. And organization engine works well seamlessly with, today talking about, I'm calling Alexa because Alexa, people talk about Alexa, it's Alexa, Google Home, Siri, whatever they talk about. But then it gives a direct response back that you have got a so and so either pre-approved loan, or there is an individual or a credit assessor who is going to be visiting your premise to understand you better this evening at 5 o'clock, and then the loan will be processed and the execution happens from that point onward seamlessly. So if we talk about a customer experience from a customer acquisition point of view, this would be my vision. When we talk about a customer acquisition, customer experience from an existing customer perspective, there are three things I would say. First, if the customers' sales are not as comfortable, one, a financial institution should certainly have the connect saying that, is there anything else we can help you out, or there are value-added services which financial institutions would, and this is what we are, all of us, I'm sure you as well, all of us are planning to give value-added service so that the customer connect is always available. And at any given point of time, from an organization perspective, we need to see that what are the customers who are nice customers, where we can cross sell or upsell to the same customers. That's point number one. Point number two, if the customer is in a customer, a sector, a geography plus sector combination, if that's in a little bit of a stress, then propensity of these customers to being defaulting, we need to get that trigger, as I think Dominic was also mentioning, that the moment we say a delinquency analysis of past, but a prediction of what could be a delinquency in future, and we can take corrective measures. And corrective measures are not always to say that okay, let's close the loan. Corrective measures are how we can help that sector in that geography to see that it bounces back as financial institution, and then collaborate with them to take this particular situation into an opportunity. So when I talk of customer experience from a new customer acquisition, and when I talk of customer experience from a customer who is in a, let's say, in a stress situation, not for his internal reasons but for external reasons as well, in both cases AI is going to play an important role. The third thing is, let's say Nikhil is a customer who is having a loan from company A, and because of rate of interest change, or because of some other reasons, because of a heavy marketing or a deceived marketing by some other educational institution, this customer is about to take a decision to move his loan from one company to another. So AI, today's AI solutions, they do help in giving you triggers as to these are the set of customers. There is a propensity of these customers migrating out of you, and you take appropriate necessary actions, explain the customers at the right time the benefits of staying with a loan with an organization, and then taking further opportunities of expanding your credit limit and things like that. So these are the three things which are important when it comes to use cases of AI based solutions for financial services institution. That's what I would say.
Amazing, Nikhil, amazing. You touch based on very interesting topic, like how from a small town guy can use Alexa with a voice without even using a mobile. They can able to apply a loan. I think that's a very excellent use case. So we also tried it and did it in a small prototype. But challenge is once again the language barriers are there, because being a rural guy, certainly like talking his own local language, sometimes it doesn't understand. So if it is English, fine, all these are happening. It absolutely. I think there little bit maturity need to be happening.
Yeah.
That's
So
a very good.
there is a path to move to that maturity for sure.
Yes, for sure. Because we tried it, we did it for some time, but what about the customer there? He is trying to talk in his own local language. Very nice. And second part is you told on various API integrations and how AI is helping you to do upsell, cross sell. That's a very interesting use case. And then finally, one last point which is very interesting is the AI is trying to tell you when a customer is moving out of you. I think that's a very, very important key where you can able to utilize on the AI part. Very nice. I think others can able to make a note of it where AI is helping. Now I move to Dominic. Dominic, from your standpoint, how AI can able to stay with the customer experience?
Okay, Balaji, I'll give you a case study which we are rightly working on it. I don't know how successful that's going to be. Basically, we are set up a prototype where chatbot is used as an email is used. So customer, whenever he wants to interact with my customer service, he writes a mail to the customer on a particular email ID, and my customer service agent respond to it. But now what we're planning, I mean, we are in discussion and almost done. We want the artificial intelligence to be implemented in that particular mail. When a mail gets generated from a customer, depending on the keywords, whether it is SOA or MITC or kind of any documents or rate of ROI chain, depending on that, the AI should read that particular mail using that particular keyword. And for example, if it's a statement of accounts, if it says there's a statement of account requirement, the AI should read the mail, automatically shoot a communication to the customer along with the statement of account, whether it can be via WhatsApp, via mail, saying that the data. So there is a less intervention of a customer service agent physically getting involved in this particular thing. So one way we are trying to do this. Second thing is, as Nikhil sir was saying, that we find today we get a lot of requests from the customers saying that X bank is giving you rev at X%, this person, that person, and we being an HFC and being a private HFC, we cannot compete with the kind of rate of interest. Their customers, we are supposed to hold back the customers, especially during this time. So there, the rate of interest, this particular sentiments, like customer writing to us, we are trying to capture these data. Last one year data, we have captured it, and we are trying to understand and trying to use a AI tool, like basically to build an engine such that any customer who's coming in with this kind of request, immediately that customer will be diverted to the customer service agent or to the respective team agent, so that he can immediately take the customer rather than losing. Today, when I look at my customer base, I have a lot of rundown coming in because of the rate of interest, because of the kind of facilities they're getting it from different financial institutions. So I'm not able to understand. In a day, you get so many mails, so many communication to happen. If you have a tool here, AI tool kind of thing, which we are working on it can understand, it can tell the customer, and this will help me out to retain my customer back, or if it is not within my range, it can go. So this data will always be helpful for me to do analyzing after 6 months when I look at I have lost so many customers. So from the business point of view, this particular region customers were looking at this particular rate of interest with this kind of business they have, whether it is salaried or self-employed. In self-employed also, we need look at what kind of business they're doing. So this kind of data which we are capturing, and we try using an AI tool. It's a very small time company which is helping us to develop this kind of customer centric. This is one thing. And second thing is we are studying on the customer sentiments, basically not like capturing the data from one is understanding the kind of activity happening on the social media account. Second thing, the kind of conversation he talks to the my customer service agent, the kind of thing, and even the text when they chat on the chat box, what kind of sentence they use, what kind of thing. So using these kind of data, we are trying to create a small algorithm so that we understand the customer sentiments, and we are able to do some kind of upselling to the customer. Because in HFC, what happened, we very clearly define we are into housing finance, we do mortgage loans, we do corporate finance, and we do construction funding. Other than that, we don't have any other multiple businesses. The max to max what we can do is we can bring in an what do you call that, we can bring in an insurance thing here. But in HFC, it is very limited kind of business. So for that sentiment only, we start playing in and around and start working on it. This is my take. And make basically we need customers to be more user friendly. Let the customer understand what you. And today customer demands, it is not that we go and ask for the customer, he demands. He says I want this, I want this, and they come out with 101 communication. This is doing that is doing. So understanding this and trying to hold back my customer is very, very important for me. Understanding the sentiment, the way they need. That is how I'm going to design my product. For this, I need an AI tool. One is to support my customer. Second thing is to understand my customer sentiments. Third thing is to hold back the customer and see that I have multiple products for the customer using with this data. I run an AI tool where my AI tool will tell me this particular segment of customers need this. So this helps me even to the ticket size also. Helps me even on my delinquency, my collections, forecasting my business. So this is how I look at customers, AI playing a very important role in customer service.
Very
That's it.
interesting. Very interesting, Dominic. Thank you for touching most of the points. Like you also tried it with WhatsApp onboarding, and then how AI is helping with the multiple customer requests, how we're consolidating and then giving to the right set of people, doing a lot of cross automation. And another interesting thing I can able to notice, you are using AI to help to run down the book size that the business wants right now, and also like you are using it for customer retention. Very interesting use case of all that. So I think AI is also being utilized in, as you rightly told, in a lot of detecting the payment frauds and multiple things it's happening. Not only the payment domain is using, the BFA domain is also using. Since we are using very extensively AI in terms of onboarding, in terms of collection, in terms of fraud, and in terms of customer experience, so AI use case is being used across our domain right now. I would say, if you ask me any domain, if you don't use AI, sorry about it. So every domain within our thing, like as you rightly told, customer is now driving us to implement the AI. So if that's the case, since AI is being deployed across all the functions within our domain, how do you see the regulatory requirements? Are we complying with or non-complying? Or the guidelines are clear? How is it all that? Let's touch base upon it. I would like to go to Nikhil right now and get his view on it.
Okay. So with all these technologies, thanks. It's a very good question, and I think the regulators' view and is something which is I would just want to give credit to the regulators, the RBI, that their views and their proactive approach actually helps us as organizations and the financial services industry as a whole to keep check right controls and how we would want to. Be resilient against any odds into this industry. Uh, when we are talking about all these new age changes or new age innovations which are coming in, and we are implementing all these innovations for two things. One is a better and seamless customer experience. Second is for a better and informed underwriting. We call it in financial services industry, even in the insurance industry, it applies the same. Uh, at the same time, there is a possibility of somebody like bypassing certain parts of it because in the end a machine is a machine. Regulator has uh, provided so for NBFC especially the master direction, if we see, which is well documented, I think few years back by RBI. The master direction gives a clear guidelines as to what are the areas you need to look at, and as and when we are maturing our technology stack for servicing our customer or acquiring new customers, every section of the master direction becomes more and more relevant, and you go deeper there in terms of your compliance to the direction. uh, every aspect when you talk of cyber resilience, they mention as to how you would need to have your cyber resilience available. When you talk about your maker checker, your review concepts within the tech solutions which you have, I think they have sections which cover those. When you talk about what are the things which you can outsource, uh, but when you are outsourcing, what are the guidelines which you need to follow? When you think of all these partner ecosystem, which is helping us to go to market faster, when we talk about these AI based use cases, uh, that section becomes very relevant. And how the regulator has defined as to how your review of your outsourced partners needs to be there. So I think the view of regulator has been so they were, I would say they were visionaries a few years back, because every section which you think or keep reading now in their original direct master direction, it becomes more and more relevant with adoption of newer technologies, newer AI based solutions, including and not limited to the solutions which are related to the IT security, IS audits, and associated cyber security and cyber resilience area. So I would say, as an initial vision, it was great. As a implementation, it is getting refined day by day. Regulators are keeping you updated as to what are the next things to be done. When we think of any new technology implementation, I'm pretty sure now with DLTs being adopted into different industries, we are going to see certain new guidelines from the regulators which will come, which are going to be more specific to how we are going to govern and manage because of the maturity of regulators and giving their new support, new line of support at every, I would say, every few months or a year, you would see there is some new direction or new small amendment which comes into the direction
Good.
that helps us as organizations to become resilient to anything which is unforeseen into the overall industry, financial services industry. So I would have a very positive view about the overall architecture of the master direction, and every organization should look at it every year once again, looking at their tech stack and their tech solutions as to what we need to do further and how we can do it appropriately. That would be my mission.
I think very nicely you summarized like how RBI is also coming out with multiple guidelines and direction. Very interesting. My one liner would be like RBI, what it does is allows the innovation to keep happening. Once the innovation is kept on maturing, they come with the kind of right guidelines and they keep helping the finance domain. I think they're in the very, very right direction in helping us. Dominic, your view on it?
Balaji, I think I compliment this statements of Mr. Nikhil sir. Okay, because RBI, because we work with RBI as well as NHB also. So they are very very clear in the master directive given to us, and depending on the kind of book size we have, and the periodic audits these days which is being conducted, especially the BCP plan, the data security, and the kind of responsibility, we are being made responsible for every niche of the technology we use, and we are solely responsible for protecting the data, and they give more importance to the customer data. This is where we RBI, and because we went through an NHB audit of late, like last 15 days back. They were very very keen. They were even got into my business application to see if there's any kind of leakage in the process flow. They're very very clear. Your documentations, when you're uploading, how are you storing it, your Aadhaar number, the KYC data, how you're capturing it, how you're going to store it, what kind of level of encryptions you are. I mean, I was really surprised, because the 4 years back when NHB did an audit to us, it was not much because I was so get involved. It was almost a half a day kind of questioning for me by the NHB officials. They're very clear. There is no deviation. I want this as per the circular sent. I want this. I want this. Now, any deviation, there's a red flag raised to us immediately. And when you and even they go to the extent of even reviewing your VAPT report of your application. That was really surprising. I mean, going into a VAPT report and seeing that is your application secured? What level of security have you built? What kind of encryptions have you done? That was really, which is really nice. And and regulators, whether it's NHB or RBI, they are focusing more on building a technology stack. They want to reduce a lot of fraud coming into the thing, especially in the financial industry. That's why I think of late I've been seeing a lot of recommendation given to the fintechs these days, because so that fintech also start booming up, and that's also kind of technology which helps our business like us who's already in the legacy process to build it up in a better way. So I do agree to Nikhil sir and the directives what is given by RBI, and they're very proactive. As Nikhil sir saying, the vision was set, and now they are following up on the vision, and they're very very clear on that. You have to have it. There is no compromise. By only one sentence, we as a HFC or NBFC team, we have to see that we consume that regulatives and we don't bypass certain. I mean, there are certain times we see there's a bypass which always happens. For example, month-end process. You shouldn't extend it to more than 30, for 4 days, 5 days. You should get it. So let's stick on to that. That's what my thing. That's it from my side, Balaji.
Superb, superb, Dominic. I think you summarized how this RBI and your own kind of regulators are helping, and we are not deviating the track. Very nice to know that. So I will now come to a final question. I would request everyone to take only few seconds to reply. It's a straight fitment question. We discussed more on AI. You can tell me how this AI is helping you in bringing down your bottom line. What kind of cost saving it is helping you? If you can able to share the percentage, the viewers will be very happy to know. If you can't share the percentage, you can tell a kind of a guideline. Yes, it is helping or not.
Balaji, can you repeat the question once again?
See, we are tracking this AI in various domains. After implementing the AI, whether your cost has come down or it has increased. If it has come down, what is the percentage it has got come down, or if it is increased, what is the percentage it has got increased? If you can share the percentage, well and good, or fine, it's okay. Whether you can able to share AI is bringing down the cost or is increasing the cost.
Sure. Okay, so my 2 cents would be that the capital and expenditure would increase over a period of, I would say, even next further 18 months, whatever it has been spent. When you see the business projections, the overall TCO is going. You will have a definite decrease in the TCO. over the years based on the business projections. So it certainly improves the TCO. It certainly brings down the per loan cost. Uh, the only thing which you see, so in your central offices, you will see a spend on technology and AI based tech stack.
Very nice. Very
There is a definite increase in efficiency which would need you can still gather, but there is a hidden cost which people would not even factor in. So many financial controllers they may or may not factor in is if our if you are not heavy and AI based algorithmic based business if you are not doing, then the kind of conversations you have with each other and the kind of communication time which you spend, if you just convert into the dollar amount or rupee amount, you would find that even today, every tech implementation has given the CBA is amazing. The cost benefit analysis is amazing. That's what I would say.
Very nice. So there are direct cost benefits, indirect cost benefits, and there are experience benefit which comes to our whole industry. I think very nicely touched. Dominic, you are one minute on this.
Balaji, it's too early for me to comment on the cost, but it has AI has really helped us from the business point of view. Operationally, it is been an additional to all my team members, and to some extent, it has reduced our cost, especially the capex part of it. And since we had implemented off late, so it will take another 18 to 20 months to actually evaluate the product and see the maturity level and see what is my exact cost cutting. But technically speaking, AI has helped us, especially in the business point of view. It has given us that I can always say that TAT is reduced than the cost. My TAT is reduced, accuracy is improved. Cost, yeah, must be after 18 months, I'll be able to give you a rough figure. I can, this is what is my percentage of cost, what I've saved against the capex, what I invested. That's my take, Balaji.
Thank you very much, Dominic. I think that's all we have for this time. It was a very, very interesting panel discussion from Nikhil and Dominic. I think we are in the right stage of implementing advanced AI right now because already we've gone through AIs and we experienced AI. So there are a lot of advanced AIs coming into play. I think people are moving forward. Those who are not started, guys, please go and start it immediately. So because already people have tested, there are proven technologies are there. Thank you. Over to Nishant.
Thank you so much. A big round of applause to all the speakers for great insights on how AI is transforming the BFSI sector in terms of customer experience, handling cyber frauds, meeting your regulatory requirements, etc. So I would like to thank each panelist for such an interesting discussion. And as a token of appreciation, I would like to ask the panelists to stay back to accept the award of participation from the Elets. So let's have the awards on the screen, please. So thank you, Mr. Balaji TK, Chief Information Officer from Orange Retail Finance Limited. Thank you, Mr. Dominic Vijay Kumar, VP and Chief Technology Officer for Art Housing Finance India Limited.
Thank you, Nishant. Thank you so much.
Thank you, Mr. Nikhil Bundy, Chief Technology, Digital and Operations Officer, APAC Financial Services Private Limited.
Thank you.
Thank you, speakers, for
Thanks,
such an
everyone.
interesting discussion.
Thank you, Balaji.
Thank you,
Pleasure
everyone.
talking to you all.
Wishing you a great
Thanks,
day.
everyone.
Pleasure.
Thank
Thanks
you so
very
much. Thanks. Bye-bye.
Bye.
Next is an interesting keynote on collections, a nightmare for BNPL companies by Mr. Vishwanath Jha. He will be here in a minute. Thank you.